Hello and welcome to the look ahead for Tuesday, the 28th of October with me, Fiona Sincotta, Senior Market Analyst at City Index. So just as far as what we'll be watching tomorrow, there's not a whole world of stuff going on. We do have GfK consumer confidence for Germany, and we also have the Consumer Board US consumer confidence in the afternoon. Obviously, we've got the US ongoing government shutdowns. We've got sort of really the ongoing scarcity of US data. And yeah, so a bit of a quiet day in that respect, but there are still a couple of themes that are really chugging along in the background. Now, this is the gold chart that I've got pulled up here. Basically, gold has fallen really quite sharply. Because of the upbeat mood that we've got between the US and China. And I think this is going to continue to be a key theme across the week because we've got that US-China trade talks going on Thursday between President Trump and Xi Jinping, the Chinese president. So, you know, that does mean that, yeah, any developments surrounding US-China trade, there's a lot of optimism that, you know, basically the framework for a trade deal has been achieved by top US and Chinese negotiators over the weekend, which is why we've had such an upbeat mood in the market today. We'll take a look at US stocks shortly, but they're up at record highs, and gold, which had rallied to those record highs of 4,381 last week, has fallen sharply. Now, interestingly, it's breaking below that sort of 4,000 level. We're just below that 4,000 level at the moment, down around 3%. Bearish engulfing candle, breaking below that rising trend line, also below that key 4,000 level. So for now, I mean, I think, you know, as we mentioned, I think longer term, there are still some opportunities for gold, but near term, there does seem to be certainly that we're testing some key levels. Just as far as central bank buying is concerned, so what the sell-off is we're seeing those safe haven outflows, you know, very much safe havens, inflows on that US-China trade jitters, which, you know, if we do get a deal between US and China this week, that would be really, you know, help end those jitters, which have been plaguing the market for quite some time, improving geopolitical outlook, at least between the US and China. As we know, there are plenty of other geopolitical tensions elsewhere between the US and Russia, Ukraine and Russia, US and Venezuela. So, you know, there are other things to be watching, but also weighing on gold is we've seen a slight strengthening in the US dollar just last week. It did push higher, but again, that may be limited just depending on what's going on with the Federal Reserve when they meet on Wednesday, expected to cut rates by 25 basis points. But I do wonder whether they will adopt a more sort of hawkish cut. Given the lack of data, they may adopt a more cautious stance. And the market's obviously pricing in another 25 basis point cut in December. So if we get a slightly more cautious stance from the Fed, that may see the market actually rein in a little bit those Fed rate cut expectations for the December month. Central bank buying has been a key part of this rally higher that we've seen across the year as well. The People's Bank of China has been a key purchaser. They have actually slowed their purchases just recently, but they're still above 22 tons, suggesting that they are still in the game for buying gold. So as I say, levels to be watching. We've just got on the downside next, the 3,944. That's the low that we saw early on around the 10th of October. Break below that, that opens the door really to 3,800. If we find that this 4,000 level sticks, then buyers are going to need to get above that sort of 4,150 level to really sort of bring the record high back into play. But plenty to be watching for gold this week. As I said, ongoing US trade, China trade developments. If they improve, that could see gold fall further. And then we've also got the Federal Reserve rate decision coming in on Wednesday. As far as data is concerned, I did mention that we've got the German consumer sentiment, not massive marking moving data. And I mean, if we just have a look at what's going on with euro US dollar, it is a little bit range bound anyway. On the downside, we've got the downside protected by that 115.50 level. On the upside, it's been protected by the 50 SMA at 117. So buyers are going to need to be looking for a move above the 50 SMA at 117 to be able to get up towards that sort of 118.30 level, which is what we saw back in July. But yeah, you know, we've got the ECB rate decision as well this week. Again, that's not expected to be a massive market mover because we're not really expecting too much from the ECB. Rates are expected to be left unchanged. And, you know, there's no clear indication that the ECB will be looking to move on rates anytime soon. In fact, you know, we also have inflation data this week, but inflation is still around that 2% level at around 2.2%. PMI data at the end of last week came in, and that was also stronger than expected. So, I mean, still slow growth, but stronger than expected. So that is slightly encouraging, but I think a lot of this depends on what we're going to be seeing going on with the dollar as to whether we see the euro managing to really break out of this near-term downward channel and get back up towards that 117 level. And then finally, let's just have a quick look at the S&P 500. Obviously, we've got earnings season as well this week. Earnings season is ramping up. We've got 173 S&P 500 companies reporting this week. We've got 5 of the 7 Magnificent 7. So Tesla reported last week. This week we've got Alphabet, Microsoft, and oh gosh, hang on. Apple and Amazon are reporting on the Thursday after the close, and then we've got Microsoft, Alphabet, and the other one, not Apple. Oh gosh, it's escaping me. But they're reporting on the Wednesday after the close. And so just as far as the S&P 500 is concerned, this is the trading in the rising trend line. Those earnings are going to be pretty key because if they make up a good portion of the S&P 500 market cap, they're also responsible for a lot of the earnings growth that we've seen coming through. So, but you know, expectations are going to be higher because we're trading at record levels. So, I mean, there is potentially still room for further upside whilst the RSI is below the that 70 level. On the upside, the next resistance level will be around the, just bear with me, the 68.70 level. That's the upper bound of that rising channel. The NASDAQ, I mean, if we just have a quick look at what's going on there, I think the NASDAQ's actually broken out. Oh, today, let me just put him back. The NASDAQ's actually just trying to break out of that rising trend line there. So we'll be watching to see whether the same thing happens. A close above that would be, you know, would really cement a breakout. But on the downside, just as far as support is concerned, there 67.65. That was the high that we saw back at the beginning of October. And then below there, we'll be looking to the 6,600 level. That's the 50 SMA, and also the rising band, lower band of the rising channel. So that is everything from me. If you'd like more videos like this, then please do like and subscribe.